Charlie?
Well, I suppose I should be watching every tiny little business down to the last nickel, but I don't. And I don't want that much detail. And I think our competitors would like it, and it wouldn't do our shareholders any good. So we'll probably just keep reporting the way we do.
You can see how flexible we are here. Station 3.
Hello, Ms. Buffett and Ms. Munger. I'm Xiaxue Jingjing from China International Capital Corporation Limited. Last week, China announced 12 new measures on further opening up the financial industry. All these measures will allow more invested institutions to enter into Chinese financial market and to ensure the policies of foreign investment to be consistent with those of domestic investment. What do you think about these new measures? Do you believe the foreign financial institutions will have more pricing power over the Chinese stock markets in the future? Do you have any plans to set up a company in China? If so, what time? Thank you.
Well, we've got one now. Dairy Queen is all over China. And it's working fine. And we didn't wait for new laws. We did it under the old laws. But we're not that big net in China, right, Warren?
We're not that big what?
In China.
No, but we had something, that could have happened that would have been quite sizable. With China, it's a big market, and we like big markets. I mean, we really can only deploy capital in a major way, maybe in 15 or so countries, just because of the size.
But generally, I think the climate is getting better. It really makes sense for the two countries to get along. Think of how stupid it would be if China and the United States didn't get along. Stupid on both sides, I might add.
Yeah, we've done well in China. We haven't done enough, but. Andrew?
Warren, this is a question from a member of the House of Lords in Westminster who happens to be here today, who also is a shareholder of the company. This is Lord Gadia, who says, you've written, we hope to invest significant sums across borders. So what's your appetite to invest in the UK and Europe, and how will Brexit impact that? And while we're at it, what's your advice for solving UK's Brexit dilemma?
That's yours, Warren.
Well, I will tell you this. I mean, I gave an interview to the Financial Times, and I don't do that very often. But one of the considerations I have is that I would like to see Berkshire Hathaway better known in both the UK and Europe. And the FT audience was an audience that I hoped would think of Berkshire more often in terms of when businesses are for sale. Our name is familiar, I think, pretty much around the world, in at least financial circles. But there's no question, if anybody's going to sell a large business in the United States, they're going to think of Berkshire. They may decide for other reasons they'd rather do it differently. But they will think of Berkshire. And I don't think, I mean, obviously that is not as true around the world. We've had some very good luck with a few people that have thought of Berkshire. I mean, such as Iskar and actually Berkshire Hathaway Energy had one of its base holdings from way back was in the UK. But I was looking, in doing that interview, I was willing to spend 3 hours with the FT reporters in the hope that when they write the story, that somebody someplace thinks of Berkshire that wouldn't otherwise think of it. And we'd love to put more money into the UK. I mean, if I get a call tomorrow and somebody says, I've got an X billion-dollar pound company that I think might make sense for you to own and that I would like to actually have as part of Berkshire, I'll get on the plane and be over there. But they'll have to tell me what their price ideas are and what it's earning. So I'm not interested in going over and talking about it and pricing it for them and then not making a deal. We like to make deals when we actually get into action. We're hoping for it. And we're hoping for a deal in the UK and or in Europe, no matter how Brexit comes out. I'm not an Englishman, but I have the feeling it was a mistake to vote to leave. But it doesn't destroy my appetite in the least for making a very large acquisition in the UK. Charlie?
Well, all my ancestors came from Northern Europe, so I'm very partial to the place. On the other hand, if you ask me how I would vote on Brexit if I lived in Britain, I don't even know. It just strikes me as a horrible problem. And I'm glad it's theirs, not mine.
But if I called you tomorrow and said we had a deal in UK, you'd tell me
I would go in a minute.
Yeah.
Yeah.
Or you tell me
Those are my kind of people. I understand them.
Yeah. Okay. Greg.
Yeah, Warren, just want to kind of maybe follow up on those past two questions because there is sort of a theme there. It seems to me that there's definitely more of a home country bias when we look at the acquisitions and investments that Berkshire has done historically. And while there's definitely value in sticking with what you know and feel the most comfortable with, it seems like you've gone from a model that was originally focused on putting boots on the ground to find investment and acquisition opportunities to one where you're seemingly more content to have sellers or the representatives call you or drop by the office, basically more of a pull model than a push model. There's nothing wrong with this, but I just wonder if the opportunity cost that comes with this type of model is that Berkshire misses out on a lot of overseas business where owners are unaware of your willingness to step up and buy them outright and allow them to run their companies under the Berkshire umbrella, and missing stocks investment opportunities because Berkshire is not necessarily familiar enough with the local market. At this point, do you think Berkshire would benefit from putting more boots on the ground in these overseas markets?
We actually must have been, after we bought his car, Eitan Wertheimer convinced me that we should get more exposure in Europe, and he helped out in doing that. I went over, he arranged various meetings. We've had a lot of contact. It isn't that they're not aware, and we do hear about some, but we do have the problem, they got to be sizable. I mean, if we do a $1 billion acquisition and it makes $100 million or thereabouts pre-tax, $80 million after tax, it's if we really know the business and we're sure we're not going to have a problem with the people running it being motivated in the future and doing a similar job as to when they had their own money in and everything, it's nice to add 80 million to 25 billion, but you can't afford to spend lots of time doing that. And we gain something by having Todd and Ted do some looking at things, screening them, and all that sort of thing. But in the end, you want some family that's held their business in Europe or in the UK for 50 or 100 years that can make a deal and that wants to do it with Berkshire. I mean, if they're looking to get the most money, if they want to have an auction, we're not going to win and we're not going to participate because we're not going to waste our time on it. If we form a acquisition crew, they'll acquire something. I mean, I've watched so many institutions in operation that if your job every day is to go to work and screen a bunch of things with the idea that you're the strategic department or acquisition department, you're going to want to do something. I want to do something, but I don't want to do something unless Berkshire benefits by it and clearly benefits by it, and generally it's to the size.
Warren, our problem is not like a boots on the ground.